For this session, we will talk about your tax administration per se, and we will look into the powers of your BIR or the functions of your BIR and the powers of the CIR. So before we start, we said before in our introductory portion last synchronous meeting that your tax administration generally entails three distinct processes. That is from the levy of the tax law up to your assessment and up to your collection. Now, we said also before that in your assessment, there is really effective tax administration by the BIR wherein it is now the taxpayer who files and pay. So generally, this is a self-assessment method wherein the taxpayer assesses himself, and whatever he assesses on himself, he will file it and then later on pay it to the BAR or to the collecting authority. Now that's one part of our tax administration. However, we also learned before that in your assessment, there are times that it will be the BIR who will assess the taxpayer. And that is in case there is no filing of a tax return or there is a filing but no payment. And then lastly, there is an incorrect filing of your tax return. So these are the problems that we encounter in your uh, assessment if ever the self-assessment of the taxpayer is not proper. So now we go with your, so as I was saying, there are times that it is not the taxpayer who self-assess himself, but it is now the BAR. So that is part of your tax administration. Later, we will also discuss, aside from the powers of the CIR or the functions of the BIR, together with the powers of the CIR, we will also discuss one particular power of the CIR, and that is to impose any penalty or to compromise or abate taxes. So later we will discuss how does this assessment works by the BIR, wherein the BIR will self-assess the taxpayer. It is not the taxpayer who will self-assess, but it is now the BIR who will assess the taxpayer. And what is the effect if in case the BIR will assess that particular taxpayer? So for today, what we will discuss or our session will revolve around these topics: the functions of the BIR, the powers of the CIR, and lastly, your penalties or your compromise and your abatement of taxes. So before we further our discussion, let's discuss first the tax administration of the Philippine taxation. So as you all know, one of the canons of a sound tax system or your principles of sound tax system is your administrative feasibility. Now, in your administrative feasibility, if there is a levy of a tax law, what we need to do with the tax law is that it must be capable of your effective and efficient administration of taxes. So, if we want an efficient and effective administration of taxes, we must have a good tax administration to avoid any problem in the compliance of your taxpayers. So how does your taxes administered in the Philippine jurisdiction? So generally, we have your main department, which is your Department of Finance, and under your Department of Finance, we have these three main bureaus. We have your Bureau of Internal Revenue, which is now for your collection of taxes. Department of Finance. Under that is your Bureau of Customs, which is now for your imports and your exports. And then lastly, your Bureau of Treasury, who keeps the amount collected by your BIR and your BOC. So now, if you all know, the Department of Finance is the main department, which is headed by your Secretary of Finance. And your Secretary of Finance is the agent of the President. It is the agent of the President. Uh, we call them your cabinet secretaries, cabinet members, or your cabinet secretaries. One of your secretaries, one of your cabinet members or cabinet secretaries is your Secretary of Finance, which heads your Department of Finance. So under executive, if this is the president has your different agents, which are your different secretaries or your cabinet members. And these agents are called the alter ego of the president. When we mean alter ego of the president, the secretary themselves, whatever they do is the act of the president. The act of the secretary is the act of the president. Now, each secretary is known as a head of a particular department. So, for example, Department of Informations and Communications Technology, Department of Finance, Department of Health. So those are the different departments which is headed by a particular secretary. Department of Agriculture is known as the Secretary of Agriculture. Now, in our case, we have your Department of Finance, and under Department of Finance, we have your Bureau of Internal Revenue, which is the main agency tasked for the collection of your taxes. So what I want you to know here is that the main department is really your finance, and under your Department of Finance is your Bureau of Internal Revenue. So Bureau of Internal Revenue is not really the main agency of the department, but it is only an instrumentality of your Department of Finance. So it is under your Department of Finance. So if we try to look into the hierarchy, we have your president, we have your Department of Finance, headed by your Secretary of Finance, and then now we have your BIR under your Department of Finance. Now the next question is, since we know who heads your Department of Finance, which is the Secretary of Finance, who now heads the Bureau of Internal Revenue? So the Bureau of Internal Revenue is, of course, headed by
Commissioner.
your Commissioner of Internal Revenue. And the Commissioner of Internal Revenue has the functions, or it's the one who will make or do the functions of the BIR. So since we know the BIR is the main agency tasked for the tax administration, so when we say tax administration, it means the management of our tax system. And you already know how our tax system works. So that can either be an online tax system or an offline tax system. Either way, that's how our tax system works here in the Philippines. Now, as we all know that the CIR heads the BIR, the CIR heads the BIR. Uh, Now, in your CIR, it performs the functions of your. So as we said, the BIR functions or the functions of the BIR is to be done or is to be administered by the CIR or the Commissioner of Internal Revenue. So before we go and dwell into the different functions of the BIR, let's first discuss your uh, powers of the BIR or the functions of BIR. Then we go with your powers of the CIR. So the first power of the BIR is the assessment and collection of all national internal revenue taxes, fees, and charges. We all we already know this one as we have discussed it last meeting. So they first assess and they collect. But as I told you, that's not what happens in the actual process. Who assesses themselves? It is the taxpayer. They will just file and then BIR will collect revenue taxes. Next, the BIR enforce of all forfeitures, penalties, and fines connected therewith, including the execution of judgments in all cases decided in its favor by the CTA and the ordinary courts. So if there are controversies which is appealed to the ordinary courts, then to the CTA and to the SC, the BIR needs to enforce all those judgments in case it is in favor to them. So what happens here is that first there is a case or controversy, and then you can appeal it first to your BIR. If ever there are problems with the BIR, you can lodge it to your ordinary courts. When we talk about ordinary courts, this can either be your MTC or your RTC, but for tax cases, generally it is the RTC because it is based on the jurisdictional amount. Most tax cases fall in the RTC. And then you can further appeal that to the Court of Tax Appeals. And then if ever, you can further appeal it to your Supreme Court. Now, if there are any decisions or judgments based on this, which is in favor to the BIR, take note, the keyword here is it must be first in favor. Okay, in favor to the BIR. Once it is in favor by the BIR, then the BIR must enforce that judgment. Sir, what if it's not in favor of the BIR? Actually, there are only two cases here. That is either BIR can collect. If can collect, then it is in favor to the BIR. If the decision is cannot collect, then it is not in favor to the BIR. Since it is in favor, meaning you can collect, then you can always just enforce this one and collect the amount of judgment to the taxpayer. So how does tax cases really evolves? Your tax cases generally is based on the collection. Most of tax cases are collections of taxes by the BIR to the taxpayer. Now, if ever the decision now is really in favor of the BIR, then they can collect. If they cannot collect, what is to enforce? They cannot collect anything, then what's to enforce? That's why this particular function really just tell you that what can be enforced only are cases which is in favor. And take note, when we say cases, these are case or controversies regarding tax collections by the BIR, which is now appealed by the taxpayer up to the courts or even to the BIR itself. Okay, so the BIR can enforce forfeitures, penalties, and fines. Generally, forfeitures happens if in case the taxpayer cannot pay. So the government can just collect the taxes through the properties of the taxpayer. So the government through the BIR can forfeit the properties of the taxpayer. How does your BIR forfeit the properties of the taxpayer? The BIR can forfeit the properties of the taxpayer by either your levy or distraint. We will discuss levy and distraint soon when we go to your administrative remedies or remedies of the government as to erring taxpayers. That will be discussed during your finals. Another function of your BIR is to give effect to and administer the supervisory and police powers conferred to it by the Tax Reform Act of 1997 and other laws. Okay, now this is actually basic in law that if ever there is a law which grants power to a particular administrative agency or institution, what happens is that that law must be given effect to. And how does the law be given effect to? Normally, you will hear this term. We call them your implementing rules and regulations. So that's how the law is affected. The agency or instrumentality or the department must create an implementing rules and regulations on that law. And the IRR must be within the metes and bounds of the law. So if ever the law has this particular profession, you must not go out further or go away with the text or the language of the law. Now, the IRR, in this case for the BIR, we call them revenue regulations or RR. So for example, we have your train law and your create law. We have what we call revenue regulations, which is provided by the BIR to give effect on whatever the law confers to the BIR or whatever is the text of the law. So generally, what happens for administrative agencies which is tasked on a particular law, they need to provide an IRR to it. So the general term is implementing rules and regulations, but for BIR we call them revenue regulations or RR, revenue regulations or RRs. So if ever you hear revenue regulations, they are interpretations of the law that is to give effect and administer the law on a particular acts. Another power of the BAR, actually, I just included the main powers of the BAR, these three. But another power of the BAR is to, of course, assign internal revenue officers and other employees to other duties. So one, maybe another function that we can say important to the BAR is this, the assignment of internal revenue officers and other employees to other duties. So how does that work? So actually, your BAR has a there is a policy under the BAR or any other revenue other departments such as your COA. BAR and COA, I think, practices this one, wherein if they have an employee, after 3 or 5 years, they will be rotated or they will be placed into or assigned into another branch. So, for example, I am an employee of BIR Baguio. After 3 years, I will be transferred to another agency or department. So that actually happens. That actually happens in the BIR. So that is a type of control or a measure by the BIR to ensure that there's no familiarity with the taxpayer and their employees. Because what happens when there is a familiarity with the taxpayer and the employees of the BAR, there is a possibility of collusion between the employee and the taxpayer, resulting to evasion of taxes or non-payment of taxes. Therefore, to avoid that familiarity, the control was placed by the BAR to transfer employees and to assign them to other agencies or other regions of the BIR. Now we go with your CIR. So we said if this is your president, which is the head of the executive, we have now your Department of Finance, headed by Secretary of Finance. And the Department of Finance, under it is your BAR, which we have your CIR. The CIR is the head of the BAR. But actually, there are five chief officials of the BAR. So what are these five chief officials? We call them the commissioner, and the deputy commissioners. Okay? We call them your commissioner and the deputy commissioners. So, who is the commissioner? So, we only have one commissioner. We call it your CIR. That is your commissioner of internal revenue. And it has four assistant chiefs, which is your deputy commissioners. So we have five chief officials composed of one commissioner and four deputy commissioners. And this four deputy commissioners is the head of a particular designated group under the BIR. So we have four groups in the BIR. And what are those four groups? First, we have your operations group. Next, we have your information systems group. And then we have your legal enforcement group, legal enforcement group. And then lastly, we have your resource management group. Okay. So the BAR has five chief officials, one commissioner, and four deputy commissioners, which are the heads of a particular group. So what are the four groups in the BAR? We have your operations group, and then we have your information systems group, we have your legal enforcement group and your resource management group. So the deputy commissioners will now head a particular group. Take note of that. The BIR has a head which is known as your CIR, but actually BIR has five chief officials. The four chief officials is lesser than the commissioner because they are only deputized commissioner of a particular group. But again, if we talk about the head of the BIR, your answer should be the CIR. If how many officials are there in the BIR, your answer should be five chief officials composed of one commissioner, four deputy commissioner. Okay, and what are the four groups which can be the designation of a particular deputy commissioner? The four groups are your operation groups, information systems group, legal enforcement group, and your resource management group. As we also said, whatever is the function of the BIR, we just finished those functions. We have your assessment and collection, the enforcement of judgments, your giving effect of the laws regarding taxation, and the assignment of your internal revenue officers and employees. So those are the functions of the BIR. These functions are administered by the CIR. And the functions of the BIR as administered by the CIR is known as the power of the CIR. So what are the different powers of the CIR? So the following are the powers of the CIR, and we'll go through it one by one. So the first power of the CIR is the power of the commissioner to interpret tax laws and decide tax cases. So in the interpretation of tax laws, we all know this one already. We call that your revenue regulations. How about decide tax cases? Actually, guys, PAR is a quasi-judicial, uh, quasi-judicial, and quasi-legislative. It is quasi-judicial and quasi-legislative. Sir, why is it known as quasi-judicial and quasi-legislative? It is quasi-legislative because, again, they can interpret tax laws, and interpreting tax laws, they provide revenue regulations. These revenue regulations form part of the laws of the land. So the revenue regulations, therefore, is considered a law. Since they can make a law, they perform legislative function. That's why we have here quasi-legislative. Sir, why is it quasi-legislative? Because it is not actually our main legislative body, but they exercise legislative function. When we say legislative function, they create law. And what is the law that your BIR creates? That is your revenue regulations. How about decide tax cases? As you all know, when we say decisions or judgments, what comes to our mind? It is only the judiciary who has the power to decide or create judgments out of a dispute or controversy. However, the BIR is considered quasi-judicial because they can also decide cases. But in this case, what particular controversy can they only decide? They can only decide for tax cases. That's why they are quasi-judicial or quasi-judicial. They are quasi-judicial because our main judiciary is lodged to your courts and your higher court, which is your Supreme Court. However, in this case, they can also be a judiciary, but they don't exercise the main judiciary function. So they are your quasi-judicial entity. So they can also decide tax cases. What do we call the tax cases that is decided by your BIR through the CIR? We call them your BIR rulings. BIR rulings. So these are the rulings of the BIR pertaining to certain tax cases. Another power of the CIR is the power of the commissioner to obtain information, summon, examine, take testimony of persons. So in your obtaining of information, generally this is used, guys, this is used just for to determine the correctness of any particular tax return and determine the compliance of the particular taxpayer, whether they are paying the correct tax amount or they are paying their proper tax liability. So again, they obtain information just to determine if ever a particular taxpayer properly filed, properly paid, or if there is any unpaid amount of taxes due to that taxpayer. Now, in obtaining information, they can also summon, examine, and take testimony of persons. So when we say they can summon, examine, and take testimony of persons, they can subpoena a particular person just to determine the correctness of a particular tax return. So when we say subpoena, under the law, we have two types of subpoena. We have your subpoena duces tecum and subpoena ad testificandum. Okay? So the commissioner can obtain information, and in obtaining information, they can summon, examine, or take testimony of persons. So when we say duces tecum or duces tecum, what happens here is that they subpoena documents. Okay? They subpoena documents. So these documents will be used, of course, to obtain information if ever the taxpayer really pays its taxes. For example, I am under investigation for a possible tax fraud. And what happens now is the BAR can subpoena me to give to them my records or my receipts, so to determine my real amount of taxes. Okay? This is they get documents. Subpoena ad testificandum, this is now your testimony. So take testimony of person or persons. We have ad testificandum. So again, your summon, examine, and take testimony of persons is just concomitant with your obtaining of information, wherein the CIR can subpoena persons or taxpayers to determine the correctness of their tax returns, to determine the real tax liability, and if ever their tax return is properly filed and the amount was properly paid. Another power of the CIR is the power of the commissioner to make assessments and prescribe additional requirements for tax administration and enforcement. You already know how does the commissioner make assessments. So when we say the commissioner can make assessment, what they do is they assess now. The BIR will now assess the taxpayer instead of that the particular taxpayer will assess himself. So here, the assessment comes from the BIR. Furthermore, they can prescribe additional requirements for tax administration and enforcement because as you all know, BIR is tasked for your tax administration. Therefore, if that particular requirement would make the collection of your tax system more or collection of taxes more efficient and effective, then so be it. Another power of the CIR is to examine the return and determination of your tax due. So actually, when the taxpayer files the return, this will now be examined by the BIR through the CIR and determine now the proper tax due as to the as to that particular tax return. But when we talk about examination of return and determination of tax due, this is now part of your assessment process of the BIR. We're in, as we all know, as we said time and time again, that when the BIR assesses, it is now the BIR through the taxpayer instead of taxpayer to the BIR. We call this assessment as your tax or deficiency assessment. So what happens here is there is notice and demand by the CIR on or his duly authorized representative against the taxpayer to pay a certain amount. We call that notice as preliminary assessment notice. So generally, what happens here is the BAR, take note, it is now the BAR who assesses the taxpayer. What do we call the particular assessment? We call that tax or deficiency assessment. Now, what happens here? There will be a notice coming from the CIR or his duly representative or duly authorized representative that you are lacking as to a particular tax payment. So we call that notice as your preliminary assessment notice. And later on, the preliminary assessment notice can be subject to an appeal by the taxpayer until such time it will become a final assessment notice. So that's how the CIR enforce the assessment and collection of taxes. They can examine the return and also determine the proper tax due. Through what function? Through an assessment called as your tax or deficiency assessments. Next, the authority to conduct inventory taking, surveillance, and to prescribe presumptive gross sales and receipts. So this inventory taking or surveillance is one of the functions of the PIR, of course, to obtain information, which we already discussed, that will be used to assess a particular taxpayer. Next, they could prescribe presumptive gross sales and receipts. What is this presumptive gross sales and receipts? This presumptive gross sales or receipts is only issued only upon there is a failure of the taxpayer to issue receipts, failure of the taxpayer to issue receipts, and another condition when the CIR can prescribe presumptive gross sales or receipt if ever the books or records of the taxpayer is incorrect. If the books or records of the taxpayer is incorrect or it is not correctly reflected in the tax return of the taxpayer. So again, inventory taking and surveillance is part of your obtaining information. Now here, another power is to describe presumptive or prescribe presumptive gross sales or receipts. When will the CIR prescribe presumptive gross sales and receipts? The CIR can prescribe presumptive gross sales and receipts only if there is a failure of the taxpayer to issue the receipts, or the books or records of the taxpayers are incorrect, or the books or records of the taxpayer is not properly reflected in the tax return of the taxpayer. Next, the CAR can also terminate taxable period. Okay, we have said this one before. If ever you are closing your business already, you must terminate your tax period. Because if you will not really close your tax period, what happens? Your tax compliances will still run. So for example, in 2018, you end your business. You did not update your information through the BIR. So 2018, you will still need to file. 2019, you will still need to file. 2020, you will need to still file. Why? So long as your 2303 is present, you have an obligation to file these taxes. And since you have the obligation to file these taxes, even if you already end your business or you ended your business, you must still file these taxes. Clear? That's the effect of non-termination of taxable period, as we have already discussed previously under your compliances. Now, what we need to know here in your authority to terminate taxable period is when do we terminate a particular tax period? So one is, of course, if there is already a termination of business, as we have said. Another, if ever there is a intention to leave the Philippines, you must already terminate your taxable period. Because again, if you leave the Philippines and you have permanent intention to stay there and you are registered here in the Philippines, what happens is your taxes will just run and run and run. Therefore, you must still file. But if you have intention to stay there, then you must severe your obligation to file the taxes here in the Philippines. Another Another condition wherein you can terminate your tax period is that if you have the intention to remove, hide, or conceal your property. So if the taxpayer has the intention to hide the property of the taxpayer. And another is if ever there is an intention to obstruct proceedings on tax cases. Actually, number three and four are kinda interrelated. Wherein, for example, you are a under a tax case, what you do is so that they cannot enforce any judgment against you, you sell all of your properties. That is considered obstruction of justice as to the proceedings of your tax case. Okay, so The CIR can terminate taxable period. When we say terminate your taxable period, that is your cancellation of your certificate of registration. And what are the conditions wherein there is a termination of taxable period? We have the four. First, termination of business or retirement of business. Second, if there is an intention to permanently leave the Philippines. Third, if the taxpayer has the intention to hide or conceal his properties. Fourth, if there is an intention of the taxpayer to obstruct the proceedings on a particular tax case. Take note, the termination of the taxable period must be communicated properly, because upon communication of your termination, what you will do is you need to pay for any tax due. As I told you, you just cannot just terminate. What you do is first terminate it, and then the BIR will assess you if ever you have any amount due to the BIR. So you must first pay those before you can finally terminate your business. Another power of the CAR, authority of the CAR to prescribe real property values. What is this real property values again? You know this one as your zonal values. If you still remember, the zonal value is the value set aside by your CAR as to the value of your zones or your properties. Uh, I don't know if you happen to notice that the Philippines or your different cities are divided into certain zones. So, for example, here in Tuguegarao, I am currently in zone one of a particular barangay here in the Tuguegarao city. So that's how it works. So barangay divided into zones, and each zone, the CIR can prescribe a zonal value. So the Philippines, as divided into zones, each particular zone, the CIR can prescribe a zonal value. What is the importance of the zonal value? It is used to deter any possible evasion of taxes or evasion of payment of taxes. So for example, in the sale of a particular real property, we compare the selling price to the fair market value. Part of your fair market value there is your zonal value. Okay, so the CAR has the authority to prescribe zonal valuations or real property values. Another, the CAR has the authority to inquire into bank deposits accounts and other related information held by financial institutions. This happens, guys, if in case the CAR needs to determine the gross estate of the dissident, needs to determine the gross estate of the dissident. As you all know, the CIR must first determine the gross estate of the dissident, especially the cash in bank, as to your estate tax. And another, if ever you are compromising under financial incapacity. Okay. So first, in your gross estate of the dissident, the CLAR can determine or inquire into bank deposits accounts to determine how much is the cash in bank of a particular taxpayer. You all know, as a general rule, we have your bank secrecy. When we say bank secrecy, the bank cannot divulge any information relating to your bank transactions or any transaction you have with the bank due to this particular law or bank secrecy law. That is a general rule. However, one of the exceptions here is this: the authority of the commissioner to inquire into bank deposits. If they can inquire into bank deposits, the bank is now, the bank cannot be secretive as to the information needed by the CAR. And what is the information needed by the CAR? First is to determine the proper gross estate of the dissident for any cash in bank. The second is for compromise in case the reason for compromise is your financial incapacity. So, of course, you must prove that you are really financially incapacitated. To determine that, you need to look into the bank account of a particular taxpayer if really they don't have the money or they don't have the means to pay off the liability. Therefore, they can be compromised. They can be compromised. Okay? So, they can inquire into bank deposits, an exemption to your bank secrecy. Another, they have the authority to accredit and register tax agents. Guys, before you can practice taxation here in the Philippines, you must be considered as an accredited tax agent. So the CAR can accredit and of course register any tax agent he wishes or he or she wishes to accredit. Sir, how about if I applied, I was not accredited? Is that final and executory? Meaning, can I not appeal it? Okay, so for example, you want to become a tax agent and the BAR did not accredit you or did not register you as a tax agent. Is that final? No, you can appeal it. You can appeal it, of course. You can appeal the decision of the CIR to the Department of Finance because as you can see in the hierarchy, we have here your CIR, we have here your CIR, and then higher up of your CAR is your Secretary of Finance under the Department of Finance. So if ever there are any decision made by the CAR which you think should be appealed, then you can raise it to the DOF, Department of Finance, or Secretary of Finance, or you can raise it to your courts. Next, authority of the commissioner to prescribe additional procedural or documentary requirements. You already know this one. We have discussed it under this, the third one. Next, authority of the commissioner to delegate power. Okay. So the CIR therefore can delegate power. So madadagdagan yung hierarchy natin. So from president, meron na tayong Department of Finance or the Secretary of Finance, and then we have your CIR. CIR can also delegate power. What powers can be delegated by the CIR? That's the question. Can all the powers be delegated? What cannot be delegated and what can be delegated? So the first is what can be delegated or what not or what cannot be delegated. So the following cannot be delegated or the non-delegated power of your commissioner. That is to issue rules and regulations or the RRs. If you still remember RR, we said, please do not forget this. We have here the functions of the BAR. The functions of the BAR is now administered by the CIR through the powers of the CIR. Therefore, one of the functions of the BAR a while back is to make rules and regulations pertaining to tax laws. Therefore, that is administered by the CIR. The CIR has the power or authority to make rules and regulations. This making of rules and regulations is non-delegable. It cannot be delegated. Another power that cannot be delegated is to issue rulings. Issue rulings. So only the CAR can issue rulings. It cannot be delegated. Another is to assign or reassign employees. So it cannot also be delegated. It cannot also be delegated. Only the CIR. Sir, why? Because of course later we will discuss how it happens. So the president, we have Secretary of Finance. Secretary of Finance, we have your CIR, and it can now delegate. It can delegate to RDO. The RDO, we have this one, Revenue District Officer. So if this is the BAR, we have several Revenue District Office, RDO, let's say 1, RDO 2, RDO 3. When we say RDO 1 under BAR, this is Revenue District Office. The head of the Revenue District Office is known as your Revenue District Officer. So one of the non-delegable power of the CIR is to assign or reassign employees. So yan siya, di ba? So pwede niya mag-assign sa RDO 1, ilipat niya sa RDO 3. So non-delegable, ibig sabihin si RDO 1, hindi niya pwedeng sabihin, uy, employee ko, lumipat ka sa RDO 3. Why? Because the Revenue District Officer can only control its own revenue district office. It cannot control the other revenue district office. Therefore, since one revenue district office cannot control the others, only the CIR can control the others. Therefore, you cannot delegate, or the CIR cannot delegate the assignment or reassignment of employees. Another non-delegable power of the CIR is the power to compromise or abate liability. The power to compromise or abate liability. Okay? So what cannot be delegated? Rules and regulations, RRs, issue rulings, the assignment or reassignment of employees, and the compromise or abate liability. As we said a while back, what is the assignment period? Normally 3 years. But as some instances, it can also be 2 years or it can also be 1 year. Okay? The assignment of revenue officers or revenue employees, it can be 2 years, 1 year, or 3 years. Take note, the CIR, as a general rule, can delegate. Exception to the rule, what cannot be delegated? To whom the CIR delegates its power? To the revenue district officer. Revenue district officer, or sometimes they call themselves regional director, regional director, RD. Okay? And the last power of the CIR, the authority to compromise, abate, and refund or credit taxes. Authority to compromise, abate, and refund or credit taxes. You already know how does your refund works. You will receive whatever you excessively paid. Credit taxes means you are given a tax credit which you can deduct to your total tax due. What's new here is your compromise and abate. And take note, the power to compromise and abate is a non-delegable power. Non-delegable power. Okay, as a rule, it is non-delegable power. So, what's the difference between abate and compromise? So, compromise versus abate. So compromise means to reduce your tax due. Abate means cancel. So for example, your tax due is 500,000. When we say compromise, it will be reduced to a certain amount. Let's say you reduce it up to 200,000. If that is abate, you have no tax due already. You will cancel the tax due. The question is when to compromise and when to abate. So first, we dwell on compromise. When do we compromise taxes? When do we compromise taxes? Okay, there are two conditions for compromise. The first compromise is, we all know, we have discussed this one a while back, you can compromise due to incapacity, financial incapacity. Another is your reasonable doubt as to validity of the assessment. Another, if ever there is a delinquent account. No, let's just dwell on the first two conditions. So you can compromise under two conditions. First condition is financial incapacity, meaning you cannot pay the assessed tax. Another is there is a reasonable doubt as to validity of assessment. Take note, the BIR now gives the assessment, and now the BIR himself doubts the assessment. So you can compromise by that time. So once you can compromise, what is the effect? It will reduce the tax. So what is the reduction? The reduction now is that the tax due will now be 10% of the assessed tax for financial incapacity and 40% of the assessed tax if there is a reasonable doubt, and other cases. Okay? So again, there are two conditions, financial incapacity and reasonable doubt. So what happens here in your compromise, there will be a reduction of your total tax due. So if ever our tax due in our example is 500,000, if that is financial incapacity, your minimum compromise settlement is the 10% of the basic assets tax. So 50,000, that's 10%. And 40% of the basic assets tax if that is your reasonable doubt or other cases. So 40% of 500,000 is 200,000. That's how your compromise works. So you will reduce the tax liability up to that amount. 10% of the basic assets tax for financial incapacity, and for reasonable doubt and other cases, 40%. Now the question is, what are these other cases? Other cases. So the other cases are your delinquent accounts. When we say delinquent accounts, they are not paying their taxes. Also, we have your pending cases. Pending cases. So those are compromisable type of cases, delinquent accounts, and your pending cases. Next question is, what cannot be compromised? What cannot be compromised? So you cannot compromise withholding tax cases. You cannot also compromise any tax fraud, uh, criminal pending cases. So what pending cases can only be compromised? Only civil pending cases. Criminal pending cases cannot be compromised, but civil pending cases can be compromised. Okay? So compromise, take note, reduction. Conditions, financial incapacity, reasonable doubt. Breach, 10%, 40%. And what cannot be compromised? Withholding tax cases, tax fraud cases, and your criminal pending cases. Next, we have your abatement or abate of taxes. So here you will cancel your tax. It will now become zero. It will now become zero. The question is, when can you abate taxes? When can you abate taxes? First, if the tax is unjustly or excessively assessed. Another uh, condition to abate your taxes if in case the tax case is prescribed. So when is it prescribed? After 3 years. After 3 years. And next, if ever the taxpayer is dead, no no property left. So when we say no property, no leviable property, or no distrainable property. Remember, how does your BIR takes property, levy, or distrain? So there's no leviable property or distrainable property. Another, if the taxpayer is abroad, again, no property left, which is leviable or distrainable. Another is if ever the cost of your collection is greater than the amount to be collected. So if ever you will assess only 500 pesos and then the total cost to effect that 500 pesos is 1,000, then it's proper to just abate or cancel the tax due. Okay? The cost of collecting the tax is greater than the amount to be collected. And then lastly, what did I forget? Last one. Okay. Corporation is dissolved. If the corporation is already dissolved. So if the corporation is already dissolved, of course, you cannot run among the stockholders of that corporation already because it is already dissolved. Nothing. There is no legal personality of that corporation already. Okay? There's no legal personality of that corporation already. So again, who can compromise or abate? It is the CIR who can compromise or abate. It is the CIR who can compromise and who can abate as a general rule. Is there an exception to that rule? General rule, it is the CIR. What is the exception to that rule? So it can be your regional evaluation board or the national evaluation board. Regional evaluation board if the tax assessed is less than or equal to 500,000. National evaluation board if ever it can be 1 million pesos or more. Okay, as a rule, the CIR, exception to the rule, who can compromise the regional evaluation board if the amount of tax to be assessed is less than or equal to 500,000, and the national evaluation board if it's 1 million pesos or more. 1 million pesos or more. That is as to your compromise and abate. Again, the last authority or power of the CIR is to compromise or abate or refund or credit tax due. We go now to your assessment per se. So we said in your introduction, uh, the topics that we will discuss today is first the functions of the BIR. Then we go to your after your functions of the BIR, we go to your powers of the CIR, which we already finished. And lastly, we go to your assessment process or the assessment made by the BIR. So we go now to your assessment. So under assessment, it refers to the determination of amounts due from a person obliged to make payments. As we said, instead that the taxpayer is the one who will file here or who will assess itself, it is now the BIR who assesses the particular taxpayer. In the context of your national internal revenue collection, it refers to the determination of taxes due from a taxpayer. So generally, this determination of taxes due from a taxpayer, as we have discussed a while back, is known as your deficiency tax assessment. So here, you are now looking into the tax liability of a particular taxpayer after audit and examination. Okay? You determine now the tax liability of a particular taxpayer after audit and examination. We all know the CIR can obtain information relating to a particular taxpayer. But the question is, when do you assess? Hey, when do you assess? So there is a prescriptive period to assess a particular taxpayer. So when we say prescriptive period, this is only the period wherein you can still run and collect against a taxpayer. Okay? It is the period to run and collect against the taxpayer. And what is the rule? That is 3 years from the due date or filing, whichever is later. From the due date or filing, whichever is later. So for example, annual income tax return of an individual. When is the due date? April 15. Okay? Why is it important that I started our discussion with your compliances? Because I want you to first know the different due dates of your tax forms so that you can easily answer problems as to your assessment. So your annual income tax return of an individual is due on April 15. So for example, our taxable period is 2020. It will now be due on April 15, 2021. If you filed, okay, the due date is April 1, 2021. If you filed it, for example, if you filed it on, let's say, you filed it on February 28, 2021, when is the last day to assess? Remember, our prescriptive period is 3 years from the due date or the filing, whichever is later. Whichever is later, 4/15 or February 28. 4/15. That's 3 years. The last day is 4/15/2024. What if you filed it on August 10, 2021? August 10 versus April 15, which is later, August 10. 3 years, 2024. So you can only assess from August 10, 2021 until August 10, 2024 because this is only the valid assessment period. Valid assessment period. If you assess after the prescriptive period, it becomes invalid assessment. It becomes an invalid assessment. Sir, question. What if I amended? What if I amended my return? Why? If you have seen your different returns, you can see their amendment return or amended return. That is considered amendment of a tax return. So what if you amended your tax return? What is the effect? If you amended your tax return, you compare it to the uh, due date versus the amended return filing date. So the date where you filed your amended return, whichever is later, right? Whichever is later. So for example, you filed February 28, you amended it on March 31, 2021. You compare it to your amended date, you compare it to the due date, whichever is again later. Clear? Okay. So you can amend your returns. If ever it is amended, you compare it to the amended date. So as a rule, we say that you can assess only up to, the BIR can only assess a taxpayer up to 3 years. Why is this important? Soon, when you have clients, you must always take note of the date. So you take note of what is assessed. So let's say you are assessed for annual income tax return and you compute for the prescriptive period. If it is beyond the prescriptive period, then that is invalid assessment. You don't have a problem. But if it is within the assessment period, that is a valid assessment. Therefore, you must determine if ever you have really a liability or you don't have a liability. Are we clear? Okay, I hope we are clear as to this prescriptive period. So as a rule, it is 3 years. 3 years. What is the exception to the rule? What is the exception to the rule? The exception to the rule is that you can assess, or the BIR can assess up to 10 years if there is a failure to file the return or there is a false or fraudulent return. Okay? As a rule, it is 3 years. But if there is a failure to file return or there is a false or fraudulent return, then the period now becomes 10 years. The period now becomes 10 years. So you count from the date, whichever comes later, filing or the due date. But in this case, upon discovery, upon discovery. 10 years upon discovery. So upon discovery of failure to file a return, or upon discovery that there is a false or fraudulent return. Okay, since we're talking about false fraudulent return whatsoever, let's discuss what's the difference of a false return, a fraudulent return, and a non-filing of return. Failure to file return is known as non-filing. So what are the differences of these three items? Non-filing, false, and then we have fraudulent. First, for your non-filing of return. Non-filing of return, of course, pertains to situations where the taxpayer did not file a return which is required to be filed with the BIR. So, you all know, under your certificate of registration, there are required returns there that you must file. If ever there is a required return there and you did not file it, then you have non-filing of return. How about a false return? This false return is of course, there is a deviation from truth. But when we talk about a false return, this can be intentional or not. But if that is a fraud return, there is an intention to deceive. Okay? So those are the differences. In your non-filing, that is when you fail to file a return that is required by the BIR. False return, it is deviation from the truth, whether intentional or not. Fraudulent return, there is an intention to deceive. The question is, when can we say that there is a fraudulent return? There is a fraudulent return if there is an understatement of 30% or overstatement of 30%. Sir, what is understated? Generally, what is understated is the sales. If you understate your sales for at least 30%, at least 30%, it is considered fraudulent. If you overstate your expenses for at least 30%, it is considered fraudulent. It is intentional because that's too much of an overstatement or understatement under the code. Clear? As a rule, 3 years. Exception, 10 years. Failure to file return, false or fraudulent return. Difference of non-filing, false or fraudulent, we have already discussed it. When we say false, either intentional or not. Fraudulent, it is always intentional. And when can you say it is a fraudulent return? If there is an understatement of at least 30% or an overstatement of at least 30%. Now, since we are talking about assessment, how does or what is the process of your assessment really? So there will be an additions to tax. When we say additions to tax, aside from your tax due, so this is how your assessment works. So there is an assessment. So aside from your tax due, there will be an additions to that. What are those additions? Plus interest, plus surcharge, plus compromise. Okay, so plus interest, plus surcharge, plus compromise. So what is the interest? The interest is 12%. So basic tax multiplied by 12% multiplied by period. Sir, what is this period? This can be days over 365, months over 12, or years over 1. Okay? That's how your interest works. 12% multiplied by your basic tax times your period. Your surcharge is 25% or 50. 25% if ever it is simple neglect. Later we will discuss when is it simple neglect. 50% when it is a willful neglect. So how does that work? Basic tax, either 25% or 50%. And then compromise. What's the difference of this compromise to the other? A while back, when we talk about the power, compromise as a power, that is to reduce tax. The compromise here we talk about is a penalty. So this is based on a tax table. Normally, compromise is always given because I don't want you to memorize the tax table for compromise. Sobrang dami niya kasi guys. As in, hindi niya siya memorize. Sobrang dami niya. Kaya dapat laging binibigay kung magkano ang compromise penalty. So additions to tax, in your assessment, aside from your tax due, we also have your interest and we have also your star charge. Now, let's discuss about your interest. So your interest can either be based from your delinquency and your deficiency. But before that, we discussed what's the difference between a tax deficiency and tax delinquency. So when we say tax delinquency, it arises upon the failure of the taxpayer to pay the tax due. Failure to pay the tax due, or there is already a demand to pay but still unpaid. There is a demand to pay but still unpaid. How about a tax deficiency? It pertains to a tax shortage. So when we say tax shortage, for example, your due is 500,000, you only paid 200,000. So kulang yung binayaran mo, deficient yung binayaran mo. Naalala ninyo yung rason kung bakit merong assessment si BIR, hindi nakapagbayad, hindi nakapag-file, or kulang yung final. 'Di ba? Yun yung mga rason natin, sinabi natin. And what are those? Those are known as tax deficiency or tax delinquency. So your interest can be based on your tax deficiency or tax delinquency. But either way, as we noted, it is 12%. 12%. Either, guys, whether it is based on tax deficiency or tax delinquency, it is 12%. Sir, pwede bang may tax deficiency, tax delinquency siya at one point? No. Isa lang na ang problema dyan. It's either hindi siya nag-file, kulang yung final, or may demand na magbayad, hindi siya nagbayad. Yun lang yon. So, your interest, whether it is delinquency or deficiency, will remain the same. Sir, ba't pa natin hahatiin ng delinquency or deficiency? Pabibo lang kasi tayo, gusto natin malaman kung anong difference ng tax deficiency at tax delinquency. Basta at least alam nyo kung ano yung tax deficiency or tax delinquency. Clear? Interest 12%. So in our example, uh, the annual income tax return of an individual is filed on August 10, 2021 for taxable period for taxable period 2020. Okay. So dapat mag-file siya April 15, 2021. Pero nag-file siya August 10, 2021. So late na siya, late na siya. Anong tawag diyan? There is a failure to pay the tax on time, which is on April 15. We call that tax delinquency. So there is a delinquency because you should have filed on April 15, but it is filed on August 10. So there will be an interest there. So let's say our basic tax is 500,000. Let's compute for our interest. So 500,000 multiplied by the rate of 12% multiplied by the period. What is the period? So let's say April. Let's count the period. April. How many days in April? There are 30 days, less 15, so 15 days. May, how many days? 31. June, how many days? 30. August, how many days? Until 10. So how many days then? We have 86 days. So multiplied by 86 over 365. So let's compute. 50,000 times 500,000 multiplied by 12% multiplied by 86 over 365. Then your interest is 14,136.99. Sir, bakit may interest? Delinquent siya. Failure to pay on time. You should pay on April 15, but he filed on and pay on August 10. So there is a failure to pay. There is an interest already. Clear? Kaya nga, napaka-importante na alam niyo yung mga due dates. Kaya yun din yung inuna natin, guys. That's why we started with the due dates for you to, of course, first know the due dates to know whether there is a delinquency on a particular taxpayer. So here there is a delinquency, April 15, to August 10, we have an interest. Clear? Another we add is surcharges. So for surcharges, we can add 25%. We can add 25%, or we can add 50%. Okay, we can add 25%, or we can add 50%. So when can we add 25% and when can we add 50%? We can add 25% if there is only a failure to file the return. It is not filed in the internal revenue officer, proper internal revenue officer, or to failure to pay on time. But 50%, kailangan lang ninyong alamin to. Willful neglect, false or fraudulent return. Pag sinabi ng problem, guys, there is a willful neglect or false or fraudulent return, 50% yung surcharge nyo. Pag hindi yan, pag wala siya sa dalawa, edi simple neglect na siya. Nasundan? Pag wala siya sa dalawa, hindi siya willful neglect, hindi siya false or fraudulent return, edi simple neglect na siya. So for example, dun sa ating problem kanina, 500,000 filed on August 10, 2021. Sabihin natin willful neglect siya. Guys, sasabihin ng problem kung willful neglect, false or fraudulent return. Pag hindi siya sinabi, edi simple neglect siya. Okay? Or sasabihin siya any of this one. Clear? Okay. So let's say willful neglect siya. So paano na? Basic tax, 500,000 plus interest. Na-compute natin yung interest kanina, di ba? 14,136.99 plus your surcharge. Your surcharge is, since it is willful, it is 50%. 50% multiplied to 500,000, 250,000. And then your compromise. Ito given naman. So let's say ang compromise is 15,000. So let's add the total tax due. 500,000 plus 14,136.99 plus 250,000 plus 15,000. We have here 779,136.99. Okay, this is your total tax due. 779,136.99. If you're asked what is the interest, surcharge, and the compromise, isa sa inyo yan. Pero pag tinanong, what is the total tax due? Yan yung sagot nyo, 779,136.90. Okay? Simple and willful neglect or surcharge. And then lastly, compromise penalty. What is the compromise penalty? Again, as compared to your power to compromise means to reduce the tax due. When I say compromise penalty, this is the additional penalty or addition to your tax. The compromise penalty is composed or imposed for each failure to file an information, return, statement, or lease, for neglect to keep any record, or for failure to supply any information. So what are the three instances wherein there is a compromise penalty? For first, we have your failure to file any information, return, or statement. Another, we have your neglect to keep any record. And lastly, that is your failure to supply information required by the tax code or by the Commissioner of Internal Revenue. So there are three instances wherein we have compromise penalty. Failure to file an information, return statement or lease, neglect to keep any record, or failure to supply any information required by the tax code. Actually, these are amounts collected by the BIR in lieu of criminal prosecution for violations committed by the taxpayers. And what are those violations? Those three. Because under the law, if you violate this one, you can be subjected to a criminal prosecution. So instead of that, you will be subject to a compromise penalty instead. Okay? Additions to tax. So if we assess as part of the power of the CIR, aside from the basic tax, we have your interest, which is 12%. We have your surcharges, and we have your compromise penalty. Okay, recap of our topic. So we started first with the tax administration. And we said under your tax administration, we have your Department of Finance, under which is your Bureau of Internal Revenue. And your Bureau of Internal Revenue has certain functions which is now exercised by the CIR, which we call them power of the CIR. These powers can be delegated or cannot be delegated. It can be delegated or it cannot be delegated. So take note of the delegable powers or non-delegable powers. Furthermore, we also talk about your assessment process, wherein we can now impose additions to tax, your interest, your surcharges, and your compromises. So these are considered your penalties. So that's it for our tax administration.